Welcome everybody for being here. Thanks for taking some time with us on a Saturday morning to learn about the Debt Shredder product. I am very fortunate to have with me Charles Baer, who you may see on the screen with me right here. But Charlie he's run this division for years in the past, as well as he's what we call an executive director in the company, and he's a. You keep all your licenses for financial planning still, don't you?
I do.
Charlie?
Yep, I do.
Keep all your license, so still doing that. So we've got Charlie with us, and he and I will be going back and forth, and we're going to get to share with you today why we think the program is so powerful and what it can do for you, because it really is a time right now where people have to be concerned with debt and what's going on. I think a lot of people had a little bit of a wake-up call to it as well, don't you, Charlie? Yeah.
No question, Jim, just so you know, my broker this week that I deal through put out a thing going, if you thought debt was an issue before, you better really be stressed over it now and get out of debt.
Yeah. Well, and you and I have talked about this a lot. When you're out of debt, you don't feel served anymore. You don't feel like someone can make you do things you don't want to do. And like what's happening happens, it's not near as scary. It's always scary, but not at the same level when you're counting on money to pay off debt that is due and you don't have it anymore, right?
Well, yeah, and no question, especially when it's the same, you can actually create some wealth using the same money you were going to pay your debt off with.
That's right. That's right. And that's what we'll talk about today. So what I'm going to do, I'm going to share my screen right now. And as doing that, I'm going to go to this PowerPoint right here. There we go. And Charlie and I are gonna talk a little bit about debt, and then we're gonna talk a little bit about our Debt Shredder product as well. And I guess if you start off, Charlie, all of us have goals we want to accomplish in life. We all have things, from the time we're little kids to the time we get married to the time we're a young person looking at those goals we want to do. And the thing is, they all take some money. As we're popping these out here, whether it's originally, golfing in Hawaii or a nice car, whether it's owning your first home. We went home shopping with one of our sons yesterday. So it was his first time ever doing home shopping, and that was an interesting thing. Whether it's getting married, vacations, these are all great goals and things that we all want to do, and we should all be striving for, to have and to do. But there tends to be a problem, and that's that these goals put us in debt, right? And at first it might be, we think a little bit, and we've got a job, we're doing okay. Unfortunately, student loans have gotten a little bit crazy right now. Then you get married, you're like, wow, now I got another income. That's cool. Everything will be good now. And then all of a sudden, baby comes, and baby's cost a little bit of money. Charlie, I still can't believe the figure you were telling me, because I thought it was less. But what's the figure to get a child now through college?
Through college is about $1 million.
$1 million.
You will have spent. And Jim, what's crazy about this scenario that we don't always talk about is that when you get married, you have two incomes, but when the child comes, that could go back to one.
Could go to one, right? Could go to one. And what if you have twins? Does that mean you're $2 million down, or does that can you sort of cut it in half, Charlie, like 1.5?
Yeah, you're $2 million down. And crazy.
Yeah, and crazy. All these things, as you are buying more things, more debt is coming.
Yep.
Well, I've got a good job, I can take care of it. I can still make my payments pretty easy. But what we're doing is extending everything out, which causes huge problems long term. And also, you just forget about some of the things, vacations, second homes, golf in Hawaii, things like that they can just be left behind. And unfortunately, they're left behind because we make small little errors in what we're doing financially that we can make changes with. And our dreams and goals get replaced by consumer debt and cost of living. And that's what, Charlie and I are really talking about. How do you get so that you're not worrying about that so much? And we tend to budget for the price tag, but fail to budget for the true cost. So what we mean on that is, you look at something, you say, oh, it's $10,000, and yeah, I'll pay for it on a credit card, or I'll put it on their program, and that 10,000 turns into 12,000, right, Charlie, or more?
No question. Hey, listen, I hate when people go, I'll get back to those things once the kids are out.
Yeah, because then
Yeah.
it's less expensive.
Yeah, well, you get back to it. You also can't do a lot of the things you wanted to do when your knees don't work and everything else.
All the fun stuff like that.
Yeah.
And we're a debt-fueled economy. You look at the average credit card debt. If you owe $1, you now owe over $16,000. Mortgage debt, I'm going to tell you, I know a lot of people have a lot bigger mortgage debts than that. Student loan debt, again, I know a lot of people with these huge student loans as well, and car loans at over 31,000. You can see how it all, just adding that up right there, people are hundreds of thousands of dollars in debt. And when you look at, we look at, well, I'm getting good rates now though, Charlie. I'm buying something, right? It's a great rate. So
Great rate.
a great rate, and that's what
they tell you. Great rate.
Great rate. And we don't realize the first year of that mortgage, 73% of what we paid went to interest, not to principal. And even 2-year, we move it all the way down to 72%. Look at the dollar amounts that are being paid on this, but we can afford it, Charlie, right?
It seems fair.
Yeah. And as we keep going through and you start looking at the 243,000 paid, you paid 243,000 after 20 years, and you still owe 97. You still owe almost half of the principal after 20 years. And after 30 years, obviously, now you've paid a big chunk of money, with interest being 164,000. At least we got ahead of it there. But there's ways, we can do that. Obviously, that doesn't turn out to 4.5%, right, Charlie?
Well, it doesn't. It's deceiving. It does because they divide it by 30 years, but they don't tell you up front you're going to pay 82% of the money back into interest.
Yeah. Lisa and I recently bought a condo here in Scottsdale, and one of the things they did have to disclaim and I think I told you what the real interest paid would be, not the 4% or whatever, 3.5%, whatever it was. And I looked at that and I thought, oh, I got to take a snapshot of this for one of our presentations, because most people don't even look at that, don't even think about it. The average household spends almost 35 cents to every dollar they make for debt. So think, for every $1,000 that comes into your household, $350 are going right out right away. And we could be living the dreams we want to. I mean, without major changes, if we could stop overpaying interest on our debt, life would totally be different. I mean, I always look at it. If you have credit card debt right now, and at the end of the month you say, oh, I had to pay $1,000 in credit card interest this month, or $500 in credit card interest. Well, if you didn't have that debt, that's $500 to take a vacation, $500 to go out to eat, $500 to put away and make it $1,000. There's a lot of different things you can do. And most people fail to get there because we're generally just comfortable enough and we want to avoid money. We're sort of, money scares us. We're not taught it the way we should be in school, right, Charlie? They don't do all the classes they should on how to take care of your own finances the right way a lot of the times when making decisions. So this slide says, how badly do you want to get out of debt on a scale of 1 to 5? And, if you look at it, I know I would be a 1, absolutely want to be debt free. If you're a 5, it's I love financial stress. It's so much fun. Who needs extra money? I don't think anybody wants to be in a 5, Charlie. And I think most people would like to get to a 1 or a 2, right?
Yep.
So I'm going to, Charlie, why don't you lead us from here on what our options are?
So if you look at our population, Jim, we know that over 60% of our population doesn't do anything but make their payments, right? In today's world, it's even worse because you're worried now, right? But then there are those people that, okay, I'm going to debt consolidate, I'm going to refinance. Maybe I'll do a biweekly mortgage. Maybe I'll do something called debt avalanche, right? Or could we make more money, send it to principal? Jim, here's one for you. I got people that go, hey, I have an extra $200 a month. I'm going to send this month to my mortgage, next month to my credit cards. We know that helps. We know it. Right. We just don't know how much. Right. So I'm still financially blind, basically. Right. It's very cloudy. So
that was me with you, Charlie. Remember when you and I first started talking? I said, Charlie, I pay more than my minimums on everything.
Yep.
And I think you asked me, well, how's that helping you? I said, well, it's getting the everything's less time. Well, which one's the best one to pay? And I was like, I don't know. I just trying to pay more. And I think, we get proud. We're like, yeah, I'm paying more than the minimum, which you should. Because you ever look at those credit card statements and it tells you if you pay the minimum, how much you'll owe. It's absolutely nuts. But when this happens, it's sort of like running. You say, I'm gonna run from here and I'm gonna run 2 miles to the school over there, but you're running and you don't know where you're going. You have no GPS and you just keep running and you just keep running and you just keep running and you start to realize you are on that treadmill, and a lot of the reasons are because of the debt that's going on.
Yeah. And we know we should do something different. And see, my point always is, why should we guess, right? Because Jim, I did the same thing you were doing. I was trying to pay off, but it was still a guess, right? So why should we guess? I just want to take a different course and use something called Debt Shredder.
Yeah.
I always, look, years ago when I first started driving, I used a GPS. Why? Or I didn't use a GPS, I used a map. That was horrible.
I was about to correct you, Charlie.
Yeah. And then I went to a GPS because I don't have to do anything but make the turn it's telling me. And Jim, if I miss it, it recalculates. And that's what Debt Shredder does. And by the way, these guys have been written up, the creators of this, by Ernest & Young, Entrepreneur of the Year, Success Magazine, Mortgage Planner, Home Business, True Wealth, Broker, Banker. And Jim, these are big time people in the real estate world.
Wow.
Right?
Wow.
And
so that says a lot about the program and how it's been operated. I mean, and I know for people watching this for the first time, you're thinking, could it help me? Well, it's great. And Charlie, I know you'll talk about it, is you can look at it ahead of time and see if it works or not. And with what you just saw, that recognition, that obviously you don't get that unless you're doing things right.
Yep. Yep. And what we don't do is we don't come out and go, listen, you need to remortgage, right? You need to refinance. You need to work a second job so we can send more money in. I don't want you to change your lender. Actually, I don't even want you to change your lifestyle unless you're way off balance, right? And that's still your choice. So Debt Shredder doesn't want you to do any of those things.
I think these were all questions I asked you, Charlie, when we were talking. Am I still going to be able to go out to eat? And stuff? Yep. You're going to do what you want to do. And for me, one of the things it helped with, and I told you this, I'm a little different. You don't have to be near as detailed as I am, but I wanted to budget out what it was and know what I was spending, because I'd never really done that. I've always been fortunate enough to make enough to not worry greatly about it. But I wanted to see what it did. But when I started seeing how the interest recalculated, it makes you wanting to do more, obviously, because you can see what you can bring it down to.
Yeah, and I look at something that actually has answers for me. So
right.
I shouldn't say that. I don't need to trust an opinion when I can have a program that does the actual math. And it's going to show me the best way to use my money to get rid of debt, cash, build reserves. And it is web-based. And we use the same banking strategies. What's interesting is we use the same security that our financial companies use out there. So safety is not an issue.
Well, that was a question I wanted to bring up. So, especially in this day and age, so financial security you say it's the same as the banks use, so that we can feel good if we're giving it. And no one can access our accounts with anything like this. This is just us being able to access it.
First of all, you don't put really anything in there that's going to give away stuff like that, but we're not looking for your account numbers. We're not looking for most of those things.
Yeah.
Right. So we don't have the security issues, but we're tied to over 14,000 financial institutions. They require you to have the security. So you can't tie to them if you don't.
Oh, I love it. Love it.
Yeah. So now this is, to me, I like this part because most of us are visual. And if I have a dashboard that says, here's the interest I have, here's how many years we're going to tell you will be done, what your potential savings are and your actual savings. Now, Jim, you don't have to follow the advice, but the dashboard recalculates and shows you how that affects you. And I love the part when I'm making a decision going, here's how it affects my net worth. Here's how it affects the amount of interest I save. I can now make a choice that is based on actual fact, not a
So
guess.
Charlie, just to make sure everybody understands, so you're saying basically when you say making a choice, you can plug the numbers in as if you did it or as if you didn't do something, and it'll give you what that interest would be, and then you can decide what you want to put in terms of if you're going to follow the system or not follow the system exactly.
Well, Jim, do you ever buy a vehicle?
Of course, yes.
And we buy the vehicle, we know how long, let's say we take it out for 60 months, right? We know we're going to make this payment for the next 60 months, but how does that really impact you financially? We don't know, right? You can actually plug all that information into Debt Shredder, and it'll tell you how long it extends your time to zero debt. And you might take a 60-month loan and it only extends your time to zero debt by 1 year.
Because you'd be prepaying it because of the extra money you have from other things you've taken care of.
Yep.
Yeah, I love this too. I love the visual fact of this. It was easy for me to work with and jump on. And then the other thing, for someone who does do this, they have a coach usually who's going to help them right off the bat. And the company we work with to do this has a what are we going to call that? A service line for us as well, right, Charlie?
Customer service that you can, whenever they're open, you can access them, which is nice.
Yeah, really nice with that.
Now, this is actually a client of mine. These guys were interesting. They had 5 newly married, well, about a year. They had a home, car loans, student loans, credit cards, $192,000 of debt. And what Debt Shredder would do, and they were going to pay for the next 29 years, right, till they were debt free. Debt Shredder has them done in like 7.1 and saved them around $130,000 just in just over 7 years, right? We save in payments.
And this is an analysis you ran for them, Charlie, based on the debts they had, and then what Debt Shredder would do with it.
So I don't have to go, let's guess if Debt Shredder will help you. I go, let's run your numbers through and actually prove it. And
now, does this include extra money, them paying extra money, Charlie?
This was exactly their current financial situation, using the exact same dollars, just using them to their advantage.
Wow, okay.
So, but what it came down to was on the red column, which is the old way they were set up, in 29, let's say 29 years, they would be debt free. And in the same 29 years on the right-hand side, the blue and green, which would be the new Debt Shredder program, they'd have all their debt paid off just like the lender. And if they got a 1% rate of return, they have $752,000 in an account.
Wow.
So they can
that's a 1% return.
1% return. So they can either have all their debt paid off and nothing, or use the exact same money, have all their debt paid off, 1% rate of return, $752,000. Now, Jim, that doesn't guarantee you're going to have 752. You got to put the money away. You have to save it.
Right. It's telling you you will have it. It's what you're going to do with it.
Yes, but I don't care if I'm wrong and you have $250,000. It's yours.
Right.
As opposed to someone else's.
Yeah, I think this says a huge. Now, Charlie, if they wanted to put on an analysis and say, like, hey, I'm going to be making an extra $200 I could put towards things in a month. Can they do that to show how that would affect it?
So let's say, Jim, you were going to go out and do something part-time, right? You're just going to, whatever it might be, and you make an extra $300 a month. You can give that to Debt Shredder and go, hey, how many more years will you cut off my debt?
Wow. Okay.
Yeah.
So you can adjust it based on income increases or decreases. Like right now, there could be some people who are struggling with, maybe they're not working. They could adjust that down.
So I had a person I talked to where, of course, with all the people that have lost their jobs, they own Debt Shredder and go, now what do I do? And now we're like 2 weeks later and going, Debt Shredder is actually adjusting to my current situation. I said, that's what it's designed to do. You can't be unemployed forever.
Right.
You just, it'll adjust. These numbers will adjust. You'll have debt a little longer than they originally told us. But where in the world can you have something that'll adjust to a crisis like today?
Right. Yeah, that's incredible.
And they know right? If they go back to work this year, they'll still be debt free in under 9,
Okay.
which is awesome.
Yeah, that is. And this chart is just showing it in a different visual way, Charlie?
Yep, same thing. It tells you, listen, we'll be done in 7.1 years. We save them 21.8, $131,000 plus.
Wow.
But Jim, we say on average, we save them $1,542 a month in what they were doing.
That's incredible.
And yeah, but what I really find it excellent is this is with no change, basically nothing to the current standard of living. I'm not refinancing.
But that's the hardest thing, Charlie. That was my hardest thing
Yep.
to understand, because I kept saying you can't get rid of debt unless you're changing some things and paying more. I guess I didn't realize where you pay and when you pay makes such a difference.
Well, but see, you were right on part of what you were thinking. You can't get these results without changing, but the change is not necessarily making more money. The change is how you're using it.
Right.
Right?
But when you do make more, then you can really accelerate with it.
And you can, yeah. And it's great because I don't have to sit down and do the math. If I look at 30 years ago, I had to sit down and do the math to try to figure this out. And after you do a few calculations, Jim, you go, okay, I'm not doing this very much longer.
Now, Charlie, you told me at one time, and I remember seeing the stats on it. If you had, 3 debts, there were X amount of calculations. If you had 4 or 5 or 6, five
is
debts.
120 calculations every single month.
So that means like if I had a mortgage, 2 cars, a credit card, and I don't know, 2 credit cards. That would be my 5 debts. And you said there's how many?
120 mathematical combinations to pay them off.
Wow. And how about if you have 6 or 7?
Well, if you go to 6, it goes from 120 to 720.
Wow.
And all I know is, Jim, at 120, I'm not doing that.
Yeah, no kidding. Had enough time doing math.
Yep.
So what strategies do we use, Charlie?
So it's interesting, like interest cancellation. And most people, I can give a basic form of this, but what interest cancellation does is allow you to pay back a fraction of the interest you would have normally paid. See, the bank loves you because you'll pay all that up front, a majority. And Debt Shredder can actually show you how to put a portion of that back in your pocket. So Jim, what if you have 5 different debts? Most people, the people that go after them, pick. They just choose, okay, I'm going to go after the highest interest rate, or I'm going to go after the smallest amount.
That's what I was doing.
And you know what you don't know, though? Is it actually right?
Yeah.
Right?
Well, I was wrong.
Yeah. Well,
remember when I told you I called about I was paying my mortgage. I thought, here I am, this upstanding citizen paying my mortgage early as, if it's due the 1st, I was paying it like on the 20th, and you have really to the 15th to pay it.
Yep.
And I called to talk to one of the financial strategy coaches with this, and she asked me why I was paying it early, and I said, because I'm getting that interest down. She really tried not to laugh. She was sweet, but she then said, well, you may want to call your bank and find out, does that really take your interest down if you're paying early? And when I called, it didn't do anything for me. So here I am paying a big chunk of money, what I think is good, ahead of time. And she's like, Jim, you could take that money and do other things with it for it. It ended up being 25 days almost, Charlie.
Almost everybody, Jim, I talk to goes, no, wait, you're going to cost me money if I wait till the 14th, right? I'm like, no, I'm not going to cost you a thing. That's yours. And until they call, listen, I had a guy that was making biweekly payments for 2.5 years. And he did not have a biweekly mortgage. I said, you need to call your bank and see what they're doing. They were holding his money in escrow until he had a full payment and then applying it. He didn't save 1 penny in 2.5 years.
That's horrible.
Yeah, he wasn't happy.
Yeah, I bet he wasn't.
Time value, Jim, if I can get more money in your pocket now, it's worth more today than it'll ever be.
Yes.
And of course, are the people that help us and do the coaching and all that, what an asset.
Yeah.
So what Debt Shredder actually tells you is how much money to move. And it's not guessing, it's an exact amount when to do it, right? So it's not saying, Jim, send your mortgage in on the 20th so they can deal with your money
Right.
for a while.
It's
Right?
telling me exactly when.
Yep. And then it tells you from what account to what account. And it always adjusts to what's going on. So this is a perfect example of the crisis going on. If you lose your job, it doesn't say, hey, stop using Debt Shredder. It says, let's adjust till you're back to work.
Right.
And move money a little smarter, but it finds you the quickest solution to zero. And this just tells you that we're not here solely to get you out of debt, but it demonstrates how much wealth we can create. And Jim, don't get me wrong, I'm not telling you where to invest money. I'm telling you money in your hands is better than not in your hands.
Right. Right. And that's the biggest thing. And that's, we talked about debt reduction. We're now talking about having money to do things with. And those are things you can learn and you can work with. But, most people never get a chance to think about it because they don't have any money in their hands. Yep. And it's also great to have that safety net. A lot of us have heard about it for a lot of years, having a safety net, but a lot of us never did it. Well, here, Charlie, I could say I want 6 months of reserve. And it'll actually calculate that into what I do each month. Isn't that right?
Yeah, absolutely. Listen, Jim, do you ever talk to people and you feel that they don't like talking about money? It's a little confusing to them. They're very, they're very unclear, right? Yep. They're unclear because when they sit down, they don't want to do the math. I'd rather have some clarity and have a program that tells me exactly what's going to happen and tell me the program is going to be exactly right. They guarantee it to you.
Yeah,
nice.
that is so good. And I love that analysis. It makes it, so much easier.
And see, that's it. Guys, if you're a guest on here today, I don't want you to just jump in and use Debt Shredder. I want you to talk to the person that invited you and go, look, run a free analysis for me. See if Debt Shredder can actually help. Because if we can put 10, 20, 50, $100,000 back in your pocket, it is better in your pocket than the lender.
That's right.
Right. And look, Jim, the only thing I can ever tell you is if you don't do something different today, your finances won't ever change.
Will never change. I know we all go through life, at 20, think we're going to retire at 35. At 35, we hope we retire at 50. At 50, we go, holy crap. Why didn't I make some changes earlier? But this will still adjust for that, which is great. I just, I think I've always been decent financially throughout my life, but this is like being okay with directions and having the GPS that says this is 100% what you're doing. Here's why you're doing it. It's the shortest route without the hazards that are there, and it takes you through there, which is great. So, what I'd like to do now, Charlie, I think is I'd like to have a couple people who are on the line with us speak if they would. Joan Herrera, could I have you? Joan's a user of the product, and she has had someone, it's a good friend of mine, and someone I knew who was actually terrified, even though she did really well with her own finances, but terrified of really knowing about them. So Joan, why don't you tell your story a little bit?
Okay, sure, Jim. Thank you. I started the program, I think about 18 months ago when Charlie came to do a seminar, and just was very intrigued by what he had to say. And you're right, I was terrified. We are pretty much, I'm in my 60s, pretty much at the end of our 45-year plan that we were living for so long. So refinanced the house multiple times, 3 15-year mortgages, that kind of thing, for remodeling, putting kids through school. So everything was very scary for me. I thought I was doing it correctly and thought I was doing a good job and was able to save, do all those things. But when I signed up for Debt Shredder, I still had 8 years to go, and I'm like, I'm 60 years old. I don't want to be paying for 8 years. So when they ran the analysis for me, it took me from 8 years down to 4, which in 18 months, I'm almost done. So, talk about freedom. It has been amazing for me. I don't even think about money anymore. I go to my Debt Shredder. I click on the things that I need to click on, and it recalculates everything for me. And, you were talking about people who are losing money right now. I'm in healthcare, so needless to say, I'm working more hours because they're only letting certain people
Thank you,
into
by
the
the way.
building.
Yeah.
So it's been a blessing because I have a little extra money. So it's paying down my debt even faster.
So Joan, I wanted to hit on a couple things you said there. So, you had 8 years left of debt. And again, this isn't, you got to start at your 20s, 30s, 40s. You said you were almost 60 when you started it.
Correct.
And how long have you been using the debt shredder now?
18 months.
18 months.
Mhm.
And so it immediately took you almost down to 4 years. But you said now you're almost completely done after 18 months, a little bit further to go. Is that because as you continued to do it, you'd understood where you were putting the money and it started bringing interest down even further?
Well, being a business owner and having that extra income going in, even if you put in an extra $300 a month, like Charlie said, it changes the strategy completely. So if you are a business owner and with the debt shredder and you aren't using it, you need to use it because your business income will take your debt even faster. Also putting, just working, putting in extra money and not, I used to lie to it and not tell it everything I was doing. I thought I could play my, financial in my head games. And when you put it in accurately, the system works.
Joan, that's probably the number one thing I've heard from people is initially it's a little, they don't want to tell, it's like they don't want to tell completely the truth. But when they do and they write in what should be done and put the real finances in, that's when it really accelerates everything.
Exactly. I mean, in the beginning, when Charlie first started talking about it, I was literally in tears. I mean, that's how afraid I was to tell anybody like I had debt. Why do I have this? And now it doesn't matter. I don't even have to worry about it.
Yeah, and a lot of people don't want to talk about their debt and that they're scared of it and what's going on. And so this gives a way to take the fear away, which I think is great. Joan, thank you for sharing. I know that's personal. I appreciate it.
You're welcome.
Enjoy your Easter weekend, please. And
thank you.
Thanks
You as
again.
well. Thank you.
All right. You're welcome. I am going to unmute Lori Elliott right now. And Lori, if you're on, I'd love to hear your story with, with the debt shredder product. Lori, are you on? I've got her. Lori? Oh, there we go.
Here.
All right.
Thank you so much.
Go ahead. I would love to hear from you, Lori, on your sort of journey with this debt shredder product.
Okay, thank you. So I started using the product in January of 2017, so about 3 years and 3 months ago. And we had a ridiculous amount of debt. It had 29 years left on our mortgage alone and $700,000 plus of debt at the start. So it was pretty dismal. Yeah, it's a lot.
Yeah.
And I was searching for a way to help us pay that down because some of it was my student loans. And I found the debt shredder and I ran the analysis and just determined that I was going to be out of debt in 13 years, which was absolutely shocking.
When you ran the analysis, so because I know, sometimes we're hearing things, it went from like 20, did you say 27 or 29?
It was 29.8. So we'd only made like 4 more.
You're as close to 30 as you could get, Lori.
Yes.
And it took you down to 13. Just again, was that with you adding extra money in, or was that with just the redirecting of when you paid and where you paid?
Exactly. It was us using the money we were already spending to pay down debt because we did what you did, Jim. We paid extra on some things, but we weren't really sure if that was the right place, but we sure thought it was.
Right.
And so when we told the software what we did and got it all set up, we actually went down to 12 years, which was even better. So 3 years and 3 months later, we've added a little bit of debt to our scenario, believe it or not. We have this great software, and I've always wanted to own an investment property. So we bought a duplex a year and a few months ago which added another $125,000 to our debt portfolio.
Okay.
Here's the really cool thing though. You mentioned this, and I want people to understand how it works. So we came home and I plugged in the rental property, $125,000 of new debt. And here's the other side. I plugged in the rental income.
Right.
And I told the software how much rent I was going to be collecting. And it actually showed me that I would be debt-free sooner, which
Wow.
that's so hard to believe. You know, it wasn't a lot sooner, but I added so much debt and now I'm going to be debt-free sooner. So at this point now, 3 years and 3 months into using the software, we're down to about 6 years to debt-free, and we've saved over $112,000 in interest.
Wow. And by the way, when Lori says that, everybody, 112,000 interest, that's $112,000. And typically that's your after-tax money you're paying to pay off interest. So it's probably more like 140, 50, $60,000 that she saved by getting rid of that. People don't always think about that, but when you're making a payment, it's usually an after-tax payment on there. So you've already, you have to earn more to get there, right? Well, Lori, that's tremendous. You guys, I know now have gone on to become Shop Financial representatives because of what you're doing with it and doing a great job with it. So you're sort of like the person who started something and then now they own it. So that's great. And keep sharing your story and keep helping more people.
Thank you so much, Jim and Charlie.
Yeah, thank you, Lori. Charlie, we had a couple questions if we could, and I think they're okay to answer. And I had a couple things that came into my mind as well. How long do you get the Debt Shredder program for, Charlie? Is it like a year you get it, or a month when you purchase it?
Yeah, when you buy Debt Shredder, you get it for the rest of your life. And
for the rest of your life.
For the rest of your life. Doesn't matter if you're 20, doesn't matter if you're 60, right? Because we all know we're going to pick up debt as we go along.
Yeah.
And it's not just debt, but like for me, Jim, I purchased this and it took me about 10 months to be less anal. Right?
So you understood my challenges because I wanted to know everything right away.
Yeah, well, I didn't want to just not know everything. I figured I knew everything and I could do it myself, and I was wrong about that one. So I bought it. 4 years later, it had me done. So I use it differently today. I still I just don't use it the same way. I use it to go, okay, if I'm going to buy a car, what's it actually going to cost me and how's it going to impact me? Right. The last time I bought a car, I put the 3 different finance options in and it told me how each one affected me.
Oh, that's interesting.
Interesting is now you can pick and go, okay, which is the smartest finance option?
Okay.
So so you have it forever. Doesn't matter.
And you'll use it for different things, even though, like you said, you've almost gone debt-free now. Although I know you're building that new house, Charlie, so that may change that as well in a little bit.
It may.
It may. Hopefully not, right? Oh, my gosh. Another question. This is available in the United States and Canada right now.
Correct.
We have been working to get it into Australia, but are still sort of at a roadblock at this point to doing that. So I know somebody had asked that as well. How many hours a month, or let's go by a week. How many hours a week would someone need to put into this, Charlie? That's a question that's come up.
So how many you need to put in as opposed to how many you actually will are different in the sense that it's kind of catchy, right? You'll feel like, God, I really want to go in and see if I can do this faster. What you need to do is, I'd say, anywhere from 15 minutes to 30 minutes a week, depending on how you're entering things.
And then there's initial area of entering stuff that takes some time, right?
It does, because you'll have an hour training up front with our consultants, our coaches, that'll walk you through the whole thing. But I have customers that call me and go, I'm on this thing a half hour every day because it's just that exciting. Do you have to do that? No.
Well, I like to go on. I go on it almost every day, as I've told you, because I like to see it. I like to see what's going on, but you don't have to do that.
No.
You know, most people honestly are going to do this in less than an hour a week, probably.
Yep.
After the initial entry, which might take you some hours to get that all set up. Couple hours doing that, like Charlie said, or more. But you know, again, is it worth it? Well, where else can you put in that kind of time and get that kind of return?
Jim, if you put in, let's say you put in an hour a week, which I think would be a long time, right?
Right.
And it puts like this customer had $131,000 in your pocket in 7.1 years. How many places can you put an hour of time a week for an extra $131,000 in your pocket?
Yeah, that's nuts.
Yeah.
Yes, this is being recorded. Some people have asked if it's being recorded. Charlie, what about software updates? Are there regular software updates?
So later this year, there'll be another software update, and that they update that right into your program as soon as they do it.
Okay, great.
No cost to you to do that.
I have another question. If you're already 73 and refinanced 3 years ago and in a lot of debt, how can this help me?
So I've actually had a number of these over the last 2 months where I have somebody that's in their middle 60s to middle 70s with 6 figures of debt. So instead of paying until you're 90, the way a lot of these are set up, we'll have them done. I just had one done in less than 5 years. Right, in their middle 60s with 6 figures of debt, we're going to have them done in less than 5 years.
Wow.
But if we could do it, let's say we could do it.
I took a lot of stress off of them too.
And that's the key, because their thought now is, how do I ever stop?
Right.
Right, and that's what we want to do, is eliminate that stress.
Okay, Charlie, how would this program work with like a HELOC, with a home equity line of credit?
So I like using it with a HELOC because the HELOC is simple interest as opposed to compound. So it actually makes it work a little faster, a little smoother.
And what does simple versus compound mean for the average person who doesn't know that?
Compound is I'm charging interest on the interest, and simple is just charging interest on what you borrowed or what's there.
Okay.
That you borrowed, as opposed to everything. But Jim, if I'm earning money, I'd rather have it compounded. If I'm paying, I'd rather have simple.
Oh, that's a good way. That's one of the best explanations I've ever heard, Charlie, on there. So you like that. That's a good option to be able to use it with as well, right?
Yeah.
Okay,
yeah.
Great.
And Jim, just so everybody knows, I think it's easier to do an analysis and look at your numbers because it's easier to understand when you're looking at your situation.
Right, and you know exactly where you're at. Charlie, so if someone wanted to buy this, there's the cost to a customer, and there's a different cost to an unfranchised owner as well. You know, if they happen to be an unfranchised owner, what is the cost to a customer for this?
The cost to the customer is $3,497. Done. You own it forever.
Okay.
Yeah. Jim, and depending on who you are, like a lot of people go, wow, that's a big number. And if you look at it, because I did retirement planning for a long time, the return to the customer I showed you on here was over 3,500% over 7 years. Right. Well, there is no place to invest $3,497 and get 3,500% return on your money without exposure to the stock market or the real estate market. Understand, right. This is just managing your money differently.
Yeah, no, that was great. And I think, you know, when we were initially talking about this, one of the things you mentioned to me was you can either not get it as if you're a customer and save your 3,500 approximate dollars, or you can get it and save your $300,000 that it'll show you how to take care of. Which would you do? And to me, that was a no-brainer.
Yep.
And then if someone's an unfranchised owner, they have the ability to get it even a better price. Isn't that right, Charlie?
They can. They can actually, as an unfranchised owner, you can pick it up at a much better price. And then you have the availability to use every platform that's available to us, which is kind of interesting because it can show you how to put more money towards debt shredder if you do things properly.
Okay.
And that's what we're all about, Jim, is let's just do things in our best interest.
Yeah, that's right. Well, great. Charlie, always appreciate you so much coming on with us and sharing. We're at the point where I have to stop asking questions right now. I hope this was helpful to everybody. Yes, this was recorded. It will probably be on Market America's YouTube page in, I would say, by Monday afternoon or so, after the weekend, and it'll be there for everyone. So again, everybody have a wonderful Easter. Be safe, be healthy, and we look forward to being with you again soon. Thank you, Charlie, so much. Have a wonderful weekend, and thanks to Joan and Lori for sharing as well. Okay, guys, take care.
Take care.